Hi, I'm Kelsey reporting from Salt Lake City. Today I'm here with Mortgage Loan Officer Andy Zhao. Hi, Andy. How are you?
I'm doing well. How about you, Kelsey?
I'm good. Thank you. We're so excited to have you here with us today. Will you introduce yourself and talk a little bit about your job responsibilities?
Yeah, so I'm a mortgage loan advisor with Utah Mortgage Loan Corporation. And my company's been in the business since 1897. We're actually one of the oldest mortgage lenders in Utah. So basically what my job is helping people determine the right loan and getting that finance when they go purchasing a home. So that's kind of my job in simple terms. There's definitely a lot of things that go into it, so I advise on people, first-time home buyers, especially what type of loan that fits their best needs. And I also help people do refinances, lower their interest rates, or even cash out, pay off, consolidate their debt. So I do everything mortgages revolving around home ownership. Yeah.
That's awesome. Can you talk a little bit about some loan options that are available and the basic requirements of them?
Absolutely. So I would say there's really two types of loans. There's a conventional loan, and then there is really an unconventional loan. So there's conventional loans, and the unconventional loans. What I mean by that, it's really government loans. So there's conventional, FHA, VA, and USDA. They're probably the top four most popular nationwide kind of loans that people get into. So kind of they all have a little bit different as far as the requirement goes. The conventional loan, that's typically like your vanilla loan. If you have a good down payment, your credit score is above at least a 680, you have some money in the bank. Now a conventional loan might be the best fit for you. So now about FHA, USDA, and VA, now they're all government loans. So what that means is they're backed by the government. So they're actually a little bit looser on the government because looser on the guidelines because they want to help you get into homes. The government want to create help you get into home ownership and start owning a home. So FHA is probably the second most popular type of loan. You can get into a home as low as a 3.5% down. Um, it's very popular for first-time home buyers, and it's a great way to get into homes. So that's the FHA. And then second, you have the VA loan, and VA loan is extreme. In my opinion, it's one of the best loans out there. It's mainly for veterans, or if you were in the military, or if you're a retired military or surviving spouse, or anything like that. Basically, what it is, you can have you don't have to have really good credit score, and it's actually 0% down, no money down. And another thing is that you don't even have mortgage insurance. So typically what mortgage insurance is you have to pay it normally if you don't have 20% down, on a conventional loan, and you have to pay it on FHA loans no matter what too. So in VA loans, you're getting 0% down. You don't have to have 700 amazing credit, and it's super good. It's one of the best loan options, and you also get as good as a rate as a 20% down on a conventional loan. So sometimes lower, just depending on the case. And then the last one is a USDA loan. This is mainly for people looking to buy in a rural area. So the property has to be rural, or they call it USDA eligible, and you can put 0% down as well. There's some fees that goes into it, but overall, it's a great loan. If you're looking to get into homeownership, there are options out there. Yeah.
That was super informative. Thank you. What should buyers expect when they're going through that process?
Yeah, absolutely. So the home buying process is definitely one of the most overwhelming things out there, because schools sometimes don't teach us exactly on how to get into a home and what we have to do. So there's couple of things that you would have to expect. The first thing that someone have to do is make sure they talk with the local expert lender and get pre-approved. And getting pre-approved is basically hop on a phone or Zoom, meet with the lender, whatever, and then go through your budget and see how much you can afford, how much you want your monthly payment to be as, and go through that consultation, thorough consultation with the lender, and then determine how much you can afford. And then by that, you'll get a pre-approval letter. And basically, this pre-approval letter, what it is basically then you can start shopping for homes. Sellers won't accept your offer if you don't have a pre-approval letter. So you shop your homes, and that's the very first step. So the whole process technically hasn't really even started yet. But that's probably one of the most important steps, knowing how much you can afford and what kind of home you're looking for. So you go shopping for a home, you find the right home, you get your offer accepted, get under contract. That's when your little journey kind of starts. It's kind of where your little journey kind of starts. So that's when you maybe update any kind of documents that the lender requires, so pay stubs. Maybe there are some things that the lender still requires. So you start that process. And then throughout the process, you should expect to hire an appraisal. An appraisal, basically what it is someone to go out to the subject property to that home and evaluate how much the home is worth. So they want to make sure what you're actually buying is worth. And after you get that appraisal back, that's when you submit your whole loan into underwriting. And what the underwriting basically means is the underwriter, sometimes people are scared of the underwriter because they're basically the determinator if your loan closes or doesn't close. They basically get a right yes or no on your loan. So basically that's what they do. We submit it into underwriting, and typically after a little bit, underwriting comes back. There's usually a couple of conditions that we still need to require, maybe to fulfill any kind of documents, and we resubmit it. And then after that, we're clear to close, and then we schedule a time for closing. That's kind of a short breakdown of each of the main milestones that what you should expect through a loan process, but definitely talk with someone to go through each of the steps thoroughly because everyone's a little bit different.
Sure. Thank you for that mile marker map. I learned a lot from that. How has coronavirus changed that process, specifically like approval? Is there more paperwork, less paperwork?
Yeah, so last year it was definitely a crazy year for the world, but also for the mortgage industry. Basically, what happened is before COVID, you have interest rates in the high threes, low fours. And basically, when COVID-19 hit, you have all these people going into suspension of their mortgages, they're filing forbearance and everything like that. So you got people stop paying the mortgages. But the banks, they still have to pay the note holders. So the banks are like, money's running out and everything like that. So that's when banks decided to make the guidelines a little bit more strict. They made your credit score, maybe you could get into a home with a 620 and maybe now you need a 640 or a 660. Every bank's a little bit different. And yeah, so all the guidelines got a little bit more strict. And one of the most important part of that is that turn times also got slow. So because of interest rates got so low, last year, it hit 50-year record lows like 16 times. It was, everyone just kept talking about the rates getting lower. So because the rates are so low and so many people wants to refinance and get into homes, lower their interest rates, you just have banks that they just don't have enough employees. I mean, they're overtime working, trying to get it through. So throughout COVID, it was, some people, it wasn't just 30 days for closing, some might be 45 days. Some places I got to 60 days in order to get it closed. Just depending on your area. The appraisals got behind too and everything like that. And one of the major things that banks were worried about was self-employed, because during COVID, you're if you're self-employed, you're a local business and you can't operate the business anymore. Now, banks are worried about that because your income then isn't stable and everything. So for self-employed people, additional documents such as profit and loss, we needed more business bank statements. They really want to make sure your business is stable. So that's kind of the overall. It definitely affected the mortgage business a ton, and we're kind of slowly getting back on track right now. Yeah.
Is that process still continuing, or has it lightened up?
Yeah, it's definitely lightened up a little bit compared, because back then, right when COVID came, basically banks panicked. Just like the world, they weren't really sure what to do. And now we have, now banks kind of have a good idea of what they need to be doing. It's been almost a year since COVID hit by now. It's been a little bit. So banks now, guidelines are still as strict. None of the guidelines are, I wouldn't say they're looser now, but some banks, they've loosened it a little bit. But I would say they're still pretty tight overall. But the turn times has improved. So maybe in April, you were seeing 60 days, and now it's 40 days. So it's improved. So still working on it, but definitely things to improve.
How frequent was the 60-day closing period?
So it just depends on the area. So us in Utah, we actually overall, so at Utah Mortgage Loan, so the company I'm currently with right now, our max was probably like 45 days. So we were still doing really good. But if we're talking nationally, as in like, I have colleagues in California, and they're telling me the appraisal doesn't go out to look at the home 1 month later. Um, yeah, because the appraisal just got super busy. Um, but it just depends on the area. Like some places might be a little busy. For us in Utah, we're actually doing really good. So at Utah Mortgage, where I'm at right now, we're still doing 30-day closes, 30 days, sometimes faster, just because we already had this type of system in place to prepare for something like this. But if we're talking other places, some banks might not already have it set up. Appraisals might be doing overtime. Just got crazy.
Yeah. With the flex that we've seen in the market, what do you think that Utah's housing market is going to look like in the future?
Yeah, absolutely. That's a great question, because there's a lot of factors that might affect this year, 2021, Utah's market. People are saying, is it going to crash? Is interest rates going to go into the ones? Should I keep waiting to sell my home? It's all these kind of questions. And I would definitely say to me, by looking at the stats, I think Utah, this market's going to stay looking really good. And here's my reason for it. So if we're looking at the stats, Utah's actually one of the top 10 like employers. Like we got a ton of people moving to Utah looking for jobs, and we're actually one of the top places for job growth. And then, so that's one big part of it. And second is actually the how much people already have equity in their homes. So I can't remember the exact stat, but I think it was like 30% of people has at least 25% equity in their homes. And not a lot of people are underwater, and the foreclosure rate right now is really low. It's probably like 4% out of like 300 million people overall. So it's really low compared to what we had in '07. We had a much larger percentage people underwater on their mortgages. And then the third thing about Utah market is that we're actually doing really well as in construction wise. So we're expecting 30,000 around 30,000 new construction units to be in the home, to be built units. Basically, when COVID happened, all of this construction stopped. They basically paused. And that was actually one thing that affected all this chaos because people were looking for homes, but there was no homes. And new construction, they also stopped working. But now we have them all back on track, and we're expecting 30,000 new units into the Utah market. So as we're seeing that, that's definitely going to be a lot more opportunities for people to buy homes and everything like that. So that's going to be huge to help people, for buyers. But overall, I think it's still going to stay in a seller's market, which basically means there's going to be more buyers than sellers, just because of how interest rates are doing and how much people want to move into homes and not a lot of homes in the market. But I think it's going to stay strong. And there's this economist, and I follow him really well, and a lot of people, especially realtors. He's an economist at National Association of Realtor, Lawrence Young, and he's a chief economist. And basically, what he says, basically, if we do have foreclosures, the demand will just eat up the foreclosures. So basically, if we do have foreclosures, there's too many people buying homes. People would just buy those foreclosures, and then we would have more home ownership. So I think it's going to stay strong. But overall, I can't really see it crashing down right now.
Interesting. On the 30,000 units, is that expected in 2021 alone?
Yeah. So overall, we're expecting 30,000 units. Overall, I think, for the most part, I'm talking with builders. They have new lots coming on every single week. So yeah, with all the builders coming through, I think we're going to see a huge volume of units coming through in Utah. So yeah.
What is your experience with builders, developers, and new construction?
I do work with builders, hand in hand, kind of helping people get into homes, and then the builders will refer the buyer to me, and we will work on the loan. So I wouldn't say I have a ton of experience as far as the builder side. But yeah, since I mainly focus on the mortgage side of the aspect, but there are builders I've worked with, and they're telling me these stats of new units coming in and new construction units, and how they're having new lots every single week. I gotta tell you something too. I was talking to a builder, I think, on their lot. I think it was a couple of homes. In like 1 week, they received 200 offers. It was like 200 offers. And these homes aren't even built yet. And I'm like, wow, that's insane.
200 offers on one home?
I believe it was I think it was a couple of homes. So I think it was like 3 or something. 3.
That's still gnarly.
Yeah. It's still it's unbelievable. And yeah, it's unbelievable. I'm talking to, especially in Utah, I'm talking to some people in Chicago or other places. They want to get a new home in Utah, and they almost don't believe it. Oh wow, you need to at least add 20,000 on the asking price. It's crazy.
Is there anything else that people should know about getting a mortgage, mortgages?
I think overall you've covered a lot of everything pretty well. I would definitely say, I think a couple of things. If you're a new buyer, definitely talk with the lender and see what kind of options are out there for you, because everyone's situation is different. So it's a little bit different. This loan might be better for you. This loan might be better for you. And also wanted to bring up another home loan option. I guess it's Utah Housing. It's specifically for Utah, and basically it's a loan program to help people with 0% down. And you have to basically typically they want to see like certain income limit. But yeah, it's a great option to get into homes. Another option, Google search kind of the grants that are available. Typically, every local authority, they have their own grants. So if you're in Salt Lake City, there's going to be a Salt Lake County grant. There's going to be a West Valley City grant. There's going to be some options out there. Every grant is a little bit different, you know. Some might require you to live in this home for 5 years to get the grant. So just a little bit of difference, but you know, I get it a lot. But if you have questions, definitely keep asking those questions. There's no stupid questions, you know.
If our listeners want to reach out to you, what's the best way for them to get a hold of you?
Yeah, absolutely. So the best way to get in touch with me would definitely be my phone number. So you could definitely either text or call. And yeah, my phone number is just 385-216-1823. That's just my cell phone, personal phone, so it's not a fax line or anything. Yeah.
Thank you for tuning in to this episode of Construction Business TV. Today I've been speaking with Mortgage Loan Officer Andy Zhao from Utah Mortgage. Don't forget to like, comment, and subscribe to our page.